Welcome everyone to the CFO Swinger Watch Report's technical analysis video for the trading week of July 14th through 18th. Now, the following research in each and every single weekly report is a chance at applying your own learn and earn trading system. On top of that, the combination of the weekly report and this technical analysis video will give you a complete top-down analysis on the overall markets and individual trade ideas. Overall, every report will be giving you full guidance and navigation in the upcoming trading week, allowing you to cut down on the extensive research time that is usually needed to achieve a very successful trading week. Take a look down below at the description box to start learning and earning through trading. With that, let's get into the markets. So the S&P 500 has basically stalled out at all-time highs. All right, so we're starting right off the bat with the S&P 500 ETF, or ticker symbol SPY. So with this quote-unquote stall out near all-time highs, that does not mean that we'll be seeing a huge crash to the downside. I'm already seeing a lot of social media posts talking about how we're in for the next huge crash to the downside. Unfortunately for them, the statistics are completely not on their side, and even market breadth and overall sentiment is not on their side. Okay, so for the time being, all right, longer term, we're in a very good and new bull market. However, there is a nuance to that. As we head into quarter three, seasonal trends will start to hit, and we should be seeing weaker price action and weaker tape from the bulls as we head into mid to late quarter three. Now, here's the thing. How far can we move lower, right, from this point forward? Because, again, the stall out does not essentially mean that we'll get a crash, but we are due for a potential pullback as we head into the seasonal trend activity and pattern for this single quarter. So personally for me, a very good retest for a potential pullback will be around $600. So this psychological whole number level that we have been able to break out of and over, and has been able to sustainably stay over the $600 whole number level. Now, if you guys want a good area of demand, all right, I would suggest a very good 10-point range for that demand area between $590 to $600. So again, $590 to $600 here. I'll make a nice little box for you guys here. Okay, now I say this because first of all, on the daily time frame here, the daily 50 SMA, this dark blue line that just gave us a very nice golden cross where it crosses over and upwards over the daily 200 SMA, has been slowly catching up to the price. But again, prices have consistently moved straight to the upside, trying to get away from this daily 50 SMA. But again, if we have this pullback, there's a high chance that we can just come back down to do a nice retest of this daily 50 SMA. And again, we have not seen a retest of this 50 SMA ever since we broke out of it, well, at the very start of May of this year. And so if we're able to get a nice retest, I would suspect that we'll be seeing price consolidating around this 10-point range of $590 to $600. Now, obviously, this also depends on how well we will react off of this $600 level, because again, it's a psychological whole number level that a lot of buyers will be willing to put their money on the line at this whole number level and try to keep this level as a line in the sand support level for many months to come, or maybe even a few years, right? So, as long as the reaction is not too weak, and even if we do dip below 600, I really hope to see very good consolidation in between this very wide 10-point range. And again, we don't even have to consolidate between these two levels here, 590 and 600. I'm just suggesting that we should be seeing, at the very least, some good consolidation around this area. Okay, and that should also coincide with the slowly rising daily 200 SMA as well. Okay, and even if you do come back down to retest both of these two very long-term daily SMAs, or the 50 and the 200 SMAs, we should be seeing very good long-term support buying coming in at every single retest at the daily 50 and the daily 200 SMA. So please remember that moving forward. Okay, so any type of pullback from here, we need to be able to hold 600. But if not, if we dip slightly below the $600 whole number level, then we should be seeing a very nice consolidation range forming between that 10-point wide range from $590 to $600. Now, from a percentage perspective, okay, percentage-wise, from the last week's closing price, okay, and if you come all the way back down to 600, that's simply nearly a negative 4% move. And again, what have I been talking about for the last 2 weeks? If you were to see a pullback in the next quarter, which is again quarter 3, we should at least minimum see a 3 to 5% pullback. Okay, I don't think we'll be seeing a textbook correction of 5 to 10%, negative 10%, although that has occurred like we saw last year. I believe it was last year or 2023. No. It was last year. Okay. And, there could be macro factors that could start a 10% pullback from these current highs, but I don't really see such macro indications that could trigger a negative 10% textbook correction. But again, the situation could change and we could be seeing some macro news or catalysts that could trigger that negative 10% textbook correction. But for now, we're going to stick to that negative 3 to negative 5% pullback from highs for quarter 3 of this fiscal year. Okay, and again, even if you go back down to, 592, right? That's going to be around negative 5%. And even if you go down to 590, right? That's still going to be negative 5%. Okay, and who knows? We might even move a little bit higher before we move down and have that textbook pullback for quarter 3. Okay, and that could potentially raise the percentage for a correction or a pullback to around, at least 600 to around 595, right? And that could occur as well. Okay, so I'm just giving you guys these different probabilities and possibilities for you guys to consider. But generally speaking, just have a good area of demand on your own daily time frame charts on the S&P 500 ETF from 590 to 600, and always be hedged. Okay, especially as we head into mid to late quarter 3. Okay, so with that in mind, let's take a look at our official swing trade idea for this week. Etsy, right? ETSY. So first of all, let me give you guys an explanation here as why there's 2 of these long entry points, right? So this one was from a previous swing trade idea, specifically from the Momentum Mentions list part of the report, or the section of the report. And unfortunately, obviously, this did not pan out, and we weren't able to get a nice breakout over $58. And we saw that right over here, right? So we were trying to look to play this potential inverted head and shoulders chart pattern. However, after this rejection from 58 and a continued move lower, we actually found some very, very good support from a multi-year support level right at this whole number level of $40. So if you guys go all the way back, okay, this $40 level came from 2018 and in June at that as well, right? And again, it's July now, so this is not really a coincidence, right? The buyers, the long-term investors and buyers have been holding this $40 level as a clear line in the sand level for the long-term investors to continue to send their money in when the price came back down to this massive macro multi-year level. So again, I love the fact that these buyers came back, right, at this $40 level and continued to defend this level and ultimately formed yet again, another rounded bottom, right? Because again, an inverted head and shoulders chart pattern is just a pattern that is filled with 3 rounded bottoms, right? So unfortunately, we're not making another inverted head and shoulders, but rather we just decided to break immensely out of this and impulsively out of this rounded bottom, and we're able to blast through this $58 whole number level. And I gave you guys some reasons as to why that could have occurred from a fundamental perspective, so please read the report as I gave you that complete top-down analysis on Etsy. So again, if you guys are watching this video before you guys have read the report, pause this video now and go read the report first as usual. Okay, so with this impulsive breakout, we had a complete move down that literally, I would say about 98% of the gains that were made here, this short squeeze like move, has been completely erased so far. However, it was able to come back down and actually create a higher low compared to the previous low. So right before the breakout here, so around this area, okay, let me actually mark it here for you guys. Okay, so from here, this previous low, we have now made a higher low. So that there's a possibility that this higher low can be completely officiated if we're able to make a higher high that is higher than this previous pivot high point. So somewhere around here. Okay, so that's the reason why I gave you guys specific profit target goals as well for this potential swing trade idea for this week. So make sure, again, you guys read the report where I give you guys that complete game plan, right? The 3-point game plan for this ticker, right? So with this in mind, okay, we definitely can see some very volatile price action as we've seen in the initial short squeeze like run up. And again, this is a turnaround story, right? This is a pivot story for this name from a fundamental and a technical perspective here. And last Thursday, we had one of the most explosive days compared to the impulsive run that we had here after a nice pullback, right? And we were able to actually hold the daily 200 and the daily 50 SMA, just as we had a nice golden cross last week, right? This is exactly last week. And if we're able to continuously stay above all of my daily SMAs, right? The daily 10, this red line, the daily 21, the light blue line, the daily 50, the dark blue, and the daily 200, the yellow line, we should be seeing a consistent move back to the highs, to the previous pivot high points, and then obviously make that higher high that will completely solidify this higher low pivot point that we just made. Okay, so again, if we're able to break over 58 again, this is the massive macro resistance level that we have been trying to stay over, okay, then we should be able to officially make this $58 level as a new support level, and obviously continue to pivot away from this massive resistance level. Okay, now with that in mind, if you go on the weekly time frame, okay, if I take out all my levels here, we're also forming a very massive broadening wedge. Okay, so obviously if I were to bring out my brush again, I'm not going to draw it here because it's going to bring back my my lines here, but you guys should be able to see it just from my mouse cursor, right? We have a ascending, right? We have the ascending resistance trend line and then the descending support trend line that forms that nice broadening wedge, that megaphone, right? And this is a broadening wedge that is a bottoming chart pattern, right? So it's basically saying that the price is in the process. There's a process underway to bottom out this current big downtrend that this stock has been on ever since it formed that nice all-time high price print in 2021. Okay, so I love to see this on the bigger time frame, on a weekly time frame here, because that just solidifies that on the longer perspective, the longer term perspective, now Etsy can be experiencing that turnaround story, not just from a fundamental perspective and a business perspective, but from a technical perspective as well. And the share price could follow that potential business pivot and turnaround story that Etsy is about to have. And again, I've explained all of that in the report, in that top down analysis as well. So please read the report. All right. So with that being said, that is it for this video. If this technical analysis video was very insightful, but most importantly, applicable, make sure you smash that like button down below. But if you're new here and you aren't subscribed to the Chart Focus One channel, make sure you hit that subscribe button as well. Now, if you're watching this video when it just became public and you would like to watch this video when it's exclusively sent with the report to your inbox, you simply need to become a reader of the CFO Swinger Watch Report. Plus, becoming a reader will automatically give you full and complete access to the private CFO Discord community where you can expedite your learn and earn trading system. And again, you can expedite your learn and earn trading system. All right, good luck, and I'll see you all tomorrow morning.